Have you ever wished you could spot major breakouts before they happen? Today, we're diving into a powerful chart pattern that does exactly that. The Volatility Contraction Pattern, or VCP. This isn't your typical flashy pattern that screams for attention. Instead, it quietly signals potential breakouts through subtle price action, giving patient traders a serious edge. In this video, you'll learn exactly how the Volatility Contraction Pattern works and how to trade it step by step. By the end, you'll understand how this one pattern can change how you see market structure forever. Let's start by breaking down the anatomy of a volatility contraction pattern. First, we need the right context, a clear uptrend showing the stock already has momentum. Within that uptrend, look for price swings that get tighter and tighter, showing that volatility is contracting. Think of it like a spring coiling before a powerful move. This is the build-up before the breakout. Volume tells us even more. We want to see volume declining as price contracts. That shows sellers are losing interest, while strong holders quietly build positions. The breakout level, or pivot point, forms near the highs of these tight swings. That's the zone to watch. For a valid VCP, we need at least 3 distinct contractions, but the most reliable patterns often show 4 or 5. Each contraction removes emotional traders and tightens the structure. By the 3rd or 4th contraction, the pattern becomes coiled and ready. Your primary entry point comes when price breaks above the pivot level on a surge in volume. That volume expansion confirms that institutional buyers are stepping in. Place your stop loss below the last significant swing low, giving the trade room to breathe while limiting your risk. For your profit target, use the height of the pattern as your minimum projection. But if the breakout is strong, let the winner run. Remember, the goal is consistency, not perfection. In strong market conditions, VCP setups can lead to explosive multi-week moves. VCP patterns appear across multiple time frames, from intraday to weekly, but they're most reliable on daily charts where institutional activity is most visible. That's where you'll find clean, controlled patterns that lead to strong breakouts. To spot potential VCPs faster, set your scanner to find stocks in strong uptrends with declining volatility and volume. Look for price staying above key moving averages while the average true range, ATR, narrows. These are the quiet setups before big breakouts. So, you have learned exactly how the volatility contraction pattern works and how to trade it step by step. Here are your key takeaways. Patience is power. The best VCPs take time to form. Clean structure equals clean trade. Avoid messy charts. Risk control first. Even great patterns fail sometimes. Follow these rules and you'll trade with the mindset of smart money. If you found value in this breakdown of the volatility contraction pattern, hit the like button and subscribe for more advanced trading lessons. Your journey to consistent profits begins with mastering reliable, repeatable setups, such as the VCP. This is Online Trading Hub, helping you think, trade, and grow like a pro.